a small business owner confused about what type of entity to choose for your business? Well, I've got you covered. In this video, we're going to be talking about the pros and cons of the different entity types and what may be best for your business. My name is Linda Tuttle, and I help small business owners maximize their income through tax savings and business systems so that you can live your life to the fullest. I've been a CPA preparing taxes for over 25 years, and this is one of my favorite things to do is help people save money, understand the tax benefits of having a home-based business. So before we get further, don't forget to hit that subscribe button so you can be notified of all my future videos to help you in your business. If you've been following me for a bit, you know that I am a huge fan of having a home-based business. Not to say that you can't have W-2 job, but the tax code just is not written to benefit employees. It's written to benefit small business owners. And so that's what I'm on a mission to do, is help educate people about the tax benefits of having a home-based business. Now, along with that, one of the first things that you as a business owner must decide once you've decided to start a business is what type of entity to decide. There are pros and cons. So first, I want to talk about being a sole proprietor. What does this mean? This means that you are the only owner of your business. You don't have legal separation from business and personal. Everything runs through your personal tax return. So the upside to this is the simplicity. There's one form called a Schedule C. You may or may not have to have a separate tax ID number. You can or you don't have to. Simplicity of you probably don't need complicated accounting software to run a profit and loss. The downside to this, like I mentioned, is that there is no legal separation. The other thing is the Schedule C can get a bad rap for being the one that's most easily audited by the IRS. And, basically it is kind of low-hanging fruit, easy to have that happen. But I also like to teach people that it's nothing to be scared of. You don't necessarily have to have an entity if you have a small home-based business, but that is there. So that's sometimes a negative to people. But the biggest drawback to me of a sole proprietor is what's called self-employment tax. When you are an employee, you are working for somebody else. Your employer is withholding Social Security and Medicare on your behalf, and they are also paying the other half of that. When you own your own business, you are the employee and the employer, so you are actually paying for all of that yourself, the Social Security and Medicare. So that's 15.3%. So simplest form, not the best form as far as taxes, but it also doesn't require a whole lot of extra work as far as accounting fees and tax expenses. So for a lot of people who are just getting started, and sometimes I tell people to do this for your first year, as you've got a lot of things that you're trying to figure out. If your company really has no legal liability, no risk to what you're doing, consider staying as a sole proprietor. There's a number of reasons to change moving forward, but that's an easy place to start. The second entity I wanted to talk about is the limited liability company, or LLC. Now, I run into this quite often where people tell me, yay, I started my business, I've got my LLC formed, I've got great tax savings in place. And I just want to kind of debunk this myth, because a lot of people get confused by this. What a limited liability company is it's kind of a hybrid between a partnership and a corporation. Easy to form, you can do it online, you create your articles of organization and file it with your state. But the biggest thing that I want to make sure that you understand is it actually does not change your tax situation from that we just talked about with a sole proprietor. You still file, if you are a single member LLC, you still file a Schedule C, you're still subject to self-employment tax. What it does do is provide the legal separation, so you can protect your personal assets from your business liabilities. So if you've got risk with what you're doing with your company, important to have that legal separation, but I just need you to understand that it does not automatically mean that you're going to get tax benefits by forming an LLC. Very popular. A lot of people like them, but I just feel like a lot of people don't understand that just having an LLC does not give you that tax benefit. Next, I want to talk about a partnership. Partnership is where you can have a general partnership. Limited partner means there's more than one person. You are sharing the assets, you're sharing the liabilities of the business. This gets filed on what's called 1065. It's a separate tax return that gets filed by the partnership. That partnership issues what's called a K1. That K1 flows through to your personal tax return. So a partnership and an LLC, they're considered a flow-through entity because the entity itself is not paying tax, but it's flowing through to the individual owners. The last one that I want to talk about is a corporation. Corporation, again, gets filed as a separate tax return. There's complete separation between the business, the individual. The disadvantage to a corporation is that the corporation itself gets taxed at the entity level, and then any salary that gets paid to the owner also gets taxed. So it's also kind of what's called the double taxation with the corporation. So I wanted to share briefly what kind of my favorite entity of choice is, and it's not necessarily for every single business owner. You need to talk to your tax preparer, but there is such a thing as being a limited liability company and filing a form that has you elect to be treated as an S corporation. An S corporation is a small corporation, which means that you can have up to 100 members. This is great if you've got all individuals. You're not going to be trying to go public, issue stock, and this is often the case with most small business owners. So you can be an LLC, elect to be treated as an S corporation. The advantage to that is that you can eliminate some of that self-employment tax. You can pay yourself kind of two ways. Part of it is a shareholder distribution and part of it is salary. So the disadvantage to this is that there are more forms to file. You have to file the S corporation tax return. You do actually have to file payroll tax with W-2, and so then you've got payroll tax withholding quarterly. You've got to make sure that you're making your payroll tax deposit that you can save thousands of dollars. And so this is something that I like people to be aware of. Again, you have to decide, am I committed to paying these extra expenses of filing the return, payroll taxes, all these extra steps in order to save money on taxes. So this is a high-level overview. There's not a one-size-fits-all. Everybody's business is a little bit different, but this is something I get so excited about, is finding the right entity for you and helping you maximize your tax savings. So I'd love for you to click that link below. It goes over in a little bit more detail the different entity types, and then find a time to talk to me. Let's see what works for you and get you all set up and going for maximizing the income in your business.